Hi, this is Alessio. Hope you're well, and welcome to a brand new update on Bitcoin. In this video, we're going to try our best to answer a very important question, which many of you have been asking. And the question is, if Bitcoin has bottomed, then what is the most likely scenario for Bitcoin? In other words, if Bitcoin has bottomed, what could potentially happen next? What is the most likely scenario next for Bitcoin? Now, before I answer this question, I'm sure there's some people watching this video right now and saying to themselves, well, isn't it obvious what could potentially happen next on Bitcoin? It's going to go to 100,000, bro. It's obvious. Okay, putting that aside, I think if you, like me, are more logically and analytically minded, and if you prefer logic, reason, evidence, and methodology as opposed to hype, then this is the video for you, because I'm going to try my best to explain to you what could potentially happen next if Bitcoin has likely bottomed. By the way, I should also mention this, quite important, that what we're not saying in this video is that Bitcoin has definitely 100% bottomed. We are not saying that, and I'm not saying that. Let me just stress this point. We do not know with 100% certainty that Bitcoin has bottomed here, okay? Even though it may look like it has, remember, there is no such thing as 100% certainty in the markets, okay? No person on this planet can possibly know with 100% certainty that Bitcoin has bottomed here. All right, guys? Listen, there's plenty of people I'm sure you've seen on CNBC. Plenty of, experts, so-called experts who go on CNBC, and they argue a very powerful, very convincing case that Bitcoin, yes, 100% has bottomed. And they'll give you all kinds of powerful stories. I'm sure you've heard it all. Oh, the technology has improved for Bitcoin now. Oh, institutions are now buying Bitcoin now. Starbucks and some companies are now paying and using Bitcoin now. Okay, listen, all those stories may be true. But remember, they do not prove that Bitcoin has definitely 100% bottomed here. Okay, there's no proof of that whatsoever. You can argue a good case. You can say there's a probability. You can say there's a probability that Bitcoin has bottomed here. That is not the same thing as certainty. All right, guys? Remember, there are no such things as certainties in the markets or in analysis. There are only probabilities. All right, guys? And by the way, in a separate video, I will explain to you what could potentially happen next if Bitcoin has not bottomed. We'll cover that in a video very soon. But for the purposes of this video, what I'm going to do my best is address this point. If Bitcoin has bottomed, then what is the most likely scenario next for Bitcoin? All right, guys? So we're going to try and answer that. One more thing I should mention is this. What really matters to us is not the story. We don't really care about the stories and the narratives that are being put out by CNBC and Bloomberg. What we really care about is this, the price action. That's all that matters. If you listen to some of the best traders in the world, like Paul Tudor Jones, Jerry Parker, they'll tell you the exact same thing. What matters is not the news or the narrative you hear on television. What matters is the price action. Price action is king. All right, guys? As Bernard Baruch once said, show me the chart and I'll tell you the news. Not I'll watch the news and then figure out what's happening to the price. So let's continue now. The question is this: if Bitcoin has bottomed, what is the most likely scenario for Bitcoin? So what I'm going to do my best, guys, in this video is try and answer this question as simply and logically as possible. By the way, before I do that though, let me just show you this. This is a very interesting chart of Bitcoin on my MT4 chart. And the reason I want to show you this is because now you won't probably see this on TradingView. But on MT4, which excludes weekend data, which is quite useful in my opinion, look what happened. This is a weekly chart of Bitcoin, and look at that candle bar on that right-hand side, right there. All right, very interesting. That looks to me like a sort of a doji spinning top candlestick at resistance, by the way, rather the resistance level as well, which often can signify a potential reversal. This often can signify a sort of a reversal pattern, especially when it happens next to resistance, a kind of a doji candlestick pattern. But it's quite interesting. We'll have to observe that and see if we get some kind of confirmation of that in the next week or so. Now, I'll explain to you what the significance of this is later in this video. But for the purposes of this video, what I'm going to do to answer this question as to what could potentially happen next on Bitcoin if it has bottomed is use probably one of the best leading indicators out there, which is Elliott wave theory. Now, I realize there are some people watching this video right now who are not probably fans of Elliott wave theory. I understand that. Listen, 5 years ago, I probably was not a fan of Elliott wave theory either. And as I'm sure you're probably aware, no methodology on the planet can possibly be correct 100% of the time. Okay, nothing can be right 100% of the time. All right, but what I found out is that one of the best leading indicators, one of the best ways to be able to forecast the market is Elliott wave theory. And by the way, some of the best trading minds in the world also use Elliott wave theory. For example, the great trader Paul Tudor Jones, who owns $1 billion hedge fund. He himself also uses Elliott wave theory. Jack Schwager, author of Market Wizards, also has said he uses Elliott wave theory. One thing I should also address is this. There are some people who say, well, isn't Elliott wave theory subjective? Isn't it possible for two different people to have different wave interpretations of the same chart? Let me just say something about that. 99.9% of analysis, of chart analysis, is subjective. Listen, even without Elliott wave theory, even without Elliott waves, show the chart of any market to anybody, to any chart analyst, and I will guarantee you they will give you a different interpretation of the chart. They will give you 2 or 3 different interpretations of the same chart. And that's without Elliott waves. And the reason is each person, each individual chart analyst will approach the market in their own unique way, from their own unique angle. Sometimes we agree, sometimes we disagree. Okay, let's continue. Now, according to Elliott wave theory, markets move in the direction of the major trend in 5 waves. In other words, markets tend to trend in 5 waves. And actually is quite useful. The reason why they do that is because the psychology of the crowd. In fact, the person behind Elliott wave theory found that it's a psychology of market participants, the crowd, that causes the market movements to move essentially in 5 waves. Now, I don't want to spend too much time on this, but let me just give you some background about the psychology of the Elliott waves. All I want to say very quickly is this. Wave 1 is usually started by institutional buying. So wave 1 is usually propagated by professionals getting in behind it. So then you get the wave 1, then you get the wave 2 correction. Wave 2 correction is usually caused by short sellers and perhaps some profit taking. Then you get the wave 3. Wave 3 is usually brought about by the crowd, people joining in. Most people begin to join in the wave 3 participation by everybody else. And then you get the profit taking, more profit taking in wave 4, and then you get wave 5. Wave 5 actually is a FOMO crowd. This is the Johnny-come-latelys, the fear of missing out crowd. Okay, that's wave 5. And then you get the major correction with the ABC. One important thing that we also need to remember is that Elliott waves are like Russian dolls. In other words, it's like one doll inside another doll, and so on and so on. Because remember, each wave is composed of smaller waves. And actually, the easiest way just to remember this is that, just think of it this way. Each wave, like for example, wave 1, 3, and 5, wave 1, 3, and 5 are composed of 5 smaller waves. And waves 2 and 4 are composed of 3 smaller waves. Now, I know you're probably thinking, how does this help us with regards to Bitcoin? We'll come to this in just a few moments. But here's what I want you to look at right now. You see, guys, if the markets move in the direction that made a trend, if markets trend in 5 waves, that means we need to pay very close attention to the start of that 5-wave move, okay? Especially waves 1 and 2. Why? Because if Bitcoin has bottomed, then it's quite likely we're dealing with waves 1 and 2 of the large major mega trend, if you want to call it that. So if you think about that, that means this. According to Elliott wave theory, wave 1 is composed of 5 smaller waves. Now remember that. It's going to be very important. Remember, wave 1 is itself composed of 5 smaller waves, as you can see right here on this chart, that blue, the blue dashed line you see right there. It's a 5-wave move inside a larger wave 1. And that means also wave 2 is composed of 3 smaller waves, the ABC wave. Something also I would draw your attention to is this. Wave 2, as you can see here, is a retracement of wave 1. In fact, wave 2 is usually a 50% to 61.8% retracement or correction to wave 1. That's going to be very important to us when we look at the chart of Bitcoin. And by the way, once wave 2 completes, as you can see here, once wave 2 completes, by the way, wave 2 cannot go below the lows of wave 1. It's quite important. Once wave 2 completes, then we start the larger wave 3 you see here. And that's how we can begin to understand that a new trend has developed, a new bull market has developed in a specific market, like, for example, in Bitcoin. So what does this mean? Well, we're going to come to that in just a few moments, but let me just give you some examples. Take a look at this chart here. This is the chart of Bitcoin from the year 2015 to 2018. So you can see on this chart, when the last major correction ended here, we started a new uptrend. Okay, that's a 1, 2, 3, for 5-wave move that occurred between 2015 to 2018. Let's go to the next chart. There it is. This is 2013, the previous bull market that occurred in Bitcoin, a 5-wave move. And there it is in 2012 to 13, as you can see right there. One important thing, again, notice on this chart, notice on these charts, is notice waves 1 and 2. Notice how wave 2 here is a retracement to wave 1. And when wave 2 completes, we start the wave 3. Okay? So let's just go back to that. Here's another example for you. Wave 1 and 2, retracement. And here it is back in 2015. Notice that 2015 we had the wave 1, wave 2 retracement, and then we started wave 3. So how does this help us? Well, let's take a look at this weekly chart. This is a weekly chart of Bitcoin. Here I'm looking at on Bitstamp. So this means that if potentially we are completing wave 1, let's just assume for the moment that what we're dealing with here is a potential wave 1, which is quite probable. So if this is wave 1, then what is most likely to happen next, as you probably gathered by now, is, let's just look at this chart one more time, is a correction or retracement to wave 2. But that's not all. As I just mentioned, wave 1 is composed of 5 smaller waves. And guess what? If we go on a lower time frame chart, this is a lower time frame chart of Bitcoin right now. This is a 4-hour chart of Bitcoin. And notice that we can actually make out a 5-wave move in Bitcoin since December. Okay, as you can see here, a 5-wave potential move in Bitcoin. And we could argue that a 5th wave here is potentially completing here or getting near to completion. All right, guys, let's go back to the chart here on Bitcoin. This is, again, the weekly chart. Now, again, if this is wave 1 and we're about to complete wave 1, this means we should expect a retracement. So I'm going to get my Fibonacci tool. Again, just go on the Fibonacci tools, get Fibonacci retracement. So we're going to draw from the lows to the highs. And this means that if we're going to expect a wave 2, a potential wave 2 retracement to this rally, all right, so this is our wave 1, which, as we mentioned, is itself composed of 5 smaller waves, then we should probably expect a retracement, okay, a wave 2 retracement, a potential ABC move, which could bring it down to the 50% or the 61.8% correction or retracement levels. As you can see, these are the levels we're seeing here. The 61.8% level puts it at 5,100 or 5,136. If, by the way, if wave 1 is completed here. And the 50% level puts it at the 5,700 level. All right. So our preferred level, of course, would be somewhere close to the 61.8% retracement. By the way, you may remember in a recent video I mentioned that usually after markets move above the averages, above these key averages, the weekly 55 and the weekly 100 moving averages, usually price has a retracement back down to test these averages. We saw this happening, for example, in 2015 as well, and also in 2012, I think it was as well. So usually markets, after they take out these averages, they have a retracement back down to this. Of course, there's no guarantee that could happen, but it's quite probable. So once wave 2, therefore, completes, so let's assume we get our, let me just draw this, wave 1, wave 2 correction or wave 2 retracement. Let me just draw that one more time. Okay, that's our wave 2 retracement. What we should probably expect after that is a bounce from these levels. So we're looking for the market from here to curve and essentially bounce off of these levels. Okay, and that makes sense when you think about it. Wave 1 and 2 completes around about here. So if wave 2 completes about here, we should start our wave 3 from about these levels and then potentially move higher. By the way, some of you are probably thinking, what is the significance of this 76.4% retracement? Now, sometimes we've seen before that price can go below the 61.8% retracement and come even down to the 76.4% retracement. That's at the 4,300 level, which would be fantastic if that happens, because that also provides a lower support level from which, for example, Bitcoin could bounce from. Okay, again, if we're forming waves 1 and 2 here. So that's, again, the scenario we're dealing with, which means this, by the way, guys, that if waves 1 and 2, in other words, if wave 2 completes about here and bounces off these levels, all right, then the most likely scenario we're dealing with on Bitcoin for the future is this. So here on this chart, I've plotted for you the future probable scenario on Bitcoin if we're dealing with a bull market, a 5-wave uptrend. All right, guys, and as you can see here, there's our wave 1, 2, which would likely complete near these averages or near the 5,100, 5,200 levels here, and then start the move up towards wave 3. And by the way, even though I've drawn this wave 3 in a kind of a straight line, as I'm sure you already know, nothing moves in a straight line. Often we'll have glitches, corrections along this wave, and that could take us potentially to the 30,000 level by the year 2021, potentially. Now, some of you are probably thinking, well, isn't 30,000 quite conservative? Maybe, who knows? But for those of you who are more bullish on Bitcoin, well, here it is. Here's the scenario for a 50,000 target. Now, some of you may be thinking, well, what if Bitcoin has not completed wave 1 last week? What if, for example, Bitcoin continues to go to 10,000 before it starts the wave 2? So I've given you a different scenario here for waves 1 and 2, as you can see here. So this, what you're seeing here is a different scenario if Bitcoin continues to go up towards 10,000 and then starts the wave 2 retracement. Okay. In this situation, it would look something like this. Wave 1, 2. Wave 2 would probably come down at 6,000 level or 5,700 and then complete about here before starting the wave 3 higher for a move towards 30,000. But let's just go back to the previous wave count that I showed you here. Let's assume for the sake of simplicity that wave 1 has completed here. Let's say at the highs we made last week. Therefore, this is the more likely scenario we're dealing with in a 5-wave move uptrend in Bitcoin. In a nutshell, what we're saying is this, that a likely move and likely retracement is now probable on Bitcoin. And all we have to do, keeping it very simple, is let's wait and see where this retracement takes us. Our preferred scenario is that if wave 1 has completed here, then wave 2 is likely to complete around this level, between the 50% to 61.8% retracement levels. Again, between 5,100 to 5,700. And again, we need to keep in mind these averages. These averages can often provide some support. Now, you might be asking this question. It's a very good question. What happens if Bitcoin drops below this 61.8% retracement? Well, we'll cover that in a separate video that I'll put out for you about what happens if Bitcoin has not bottomed. All right, so we'll cover that in a separate video. But of course, we do have the 76.4% retracement down here as well. All right, guys, I hope this video has helped you. If it has, please give it a thumbs up. And also, please remember, guys, to click on the bell icon next to the subscribe button, if you haven't already done so, to make sure you don't miss our future updates. Thank you very much indeed. I'll see you guys in the next update. Bye for now.